So are you guys ready? We are in the little bit of a pullback that has started to take place. I did mention this on yesterday's show, and I warned you that it could happen at any moment, and here we are. So we have a whole lot to get through today, and definitely still the most pressing and important story is this whole scenario with Genesis. And Dylan Leclerc, he says over here that I think people are missing how big the Genesis news is. One of the biggest lending desks in the space. Not only does the withdrawal hold lead to more balance sheet impairment, but the lack of new loan origination going forward will lead to a financial crunch for debtors. And he goes on to say, there is still a whole lot of crypto collateralized debt obligations out there. Not only does this perpetuate the contagion domino effect, and that's very important, this contagion is not over yet, in my opinion. And he says, but this also will further the liquidity crunch being felt across the space as institutional players reach for additional financing. And there is a lot to consider. Is the market bottom in? Are we close to the bottom? Where exactly are we within the cycle? And that is essentially what I want to try and decipher for you guys today. So if you have a look here at Dan Moorhead, he says that, and he's from Pantera Capital. He has been on the show a couple of times before. He says the next Bitcoin halving is expected in April of 2024. Bitcoin has historically bottomed 477 days prior to the halving, which, if history were to repeat itself, would imply a trough around the turn of the year. And then I did actually put a chart up for that as well, which I will show you. Let's just go to it right now, I guess. So having a look at this chart over here, if I put it onto a daily, essentially pretty much the end of the year, so January, and take it to April, you can see how far out we are from that vertical line, the first one. Let me move it onto a daily chart. This is a quarterly chart, so I had marked out the key areas of interest, and you can see we are very, very close to the end. What that's basically telling you is timing-wise, we are in the region of about 45 days out from that vertical line. So what does that mean? All that I'm implying is that, again, the safest thing to do right now is dollar cost average, because you pretty much would be hoping to capitalize on the majority of this move. So even if it comes lower and it goes like that, and you've been dollar cost averaging into this area, your average entry is probably going to be in the region of that $12,000 level. And when you do look at this zone over here, you can see very, very simple chart on a 3-month chart. You can do yourself a lot of favors by zooming out on your favorite cryptos and just take a look at the chart and ask yourself, if this were a 5-minute chart, a 1-hour chart, what would you do? As a trader, what would you do on this chart right now? I definitely would not buy this chart as a trader until it literally hit that yellow line. That yellow line is coming in at $11,000. We have a nice area of confluence that lines up as well with the strong horizontals, and it really is as simple as that. I could pretty much close the laptop right now, call it a day, and we come back when it hits that level. I really think that it is as simple as that. So play it safe, dollar cost average throughout the slump, and then coming into the halving, usually that is where, of course, the mining reward for Bitcoin changes, and that's where prices go up. And Bitcoin is very mathematically, stable and programmed in that sense that if you consider the all-time high of 2013, you plus 4 years, the next all-time high was 2017, you plus 4 years, it was exactly 2021, we hit the top, and then you plus the next 4 years, you'd be looking at in the region of 2025 for the next top. But the parabolic run would probably begin sometime in the end of 2023 to the beginning of 2024. So a lot of guys seem to think that the bottom is in. You have Nayib Bukele of El Salvador, their president. He says we are buying 1 Bitcoin every day starting tomorrow. So there we go. Dollar cost averaging is the way to go. And this is a very, very important tweet, and it's pretty much the reason that I'm still here. And he says here, Crypto Cred, buying the bottom is overrated. Number one, markets can continue to chop, eroding your mental capital. And then in brackets, he writes the risk of selling early or mismanaging good entries. And then he says, and number two, market bottom and new uptrends are different things, separated by months to years. So be patient. Number three, he says, even after the bottom, there's a high probability of a backfill of that wick, usually giving you a better entry. Better meaning safer entry, not necessarily a lower entry, but a safer entry. 4, serious money is made in the uptrend when new coins and narratives accelerate, not during ghost town. And number 5, in my opinion, it's better off waiting for extreme mispricings or extreme strength. And I want to touch on that point. Bitcoin always goes down deeper than what most people think. In the bear markets, it always goes to more extremes. Always, the RSIs are always more oversold than you ever thought, more overbought than you ever thought in a bull market as well. So you need to be very cognizant of that. But then this is the part that I absolutely love. And this is so me. This is 100% me. He says, am I going to ignore my own advice and try to buy the bottom anyway? Because I love the game. And he says, you're goddamn right I am. And that is exactly how I feel as well. I'm definitely going to try and buy the bottom just because we love to do that as traders as part of the thrill. But if you want to be an investor, you're better off waiting for an uptrend. Now, looking at this chart over here, you have Bitcoin on the daily, and this is using Renko charting candles, which most of you will not have access to. Haven't brought this up for a while. Very, very simply put, I just marked out the key areas. And will you have a look at that? So potential zones for bottom, again, it lines up perfectly within this liquid zone on the left is between $10,000 and $13,000. And if you look at what price is doing, it continues to remain red consecutively in a downtrend. The downtrend is strong. Couple of times where it turned green before, around 20,000 up to 23. A little bit of a bull trap over there. And same thing that happened over here around 30K. Same thing that happened over here between 40 and 45K. So continues to remain red. Wait for a strong area of support to get hit before you make your major entries. All right, moving on. We have, of course, the descending triangle. Still waiting for that to play out, similar to 2018. Now, Wi-Fi, who drops a lot of good alpha, says over here, we are in stage 2 of this inflationary bear market recession. Stage 1 was the easiest. Stage 2 is bear market rally town. So in other words, expecting more upside, at least from Wi-Fi. Stage 3 is the panic, and stage 4 is the depression with deflation. This illiquid market will only get harder to trade with extended trading ranges, the big one. And basically suggesting that soon we are coming into stage 3 and stage 4. So the bottom is likely not in. And I think that you can relate this similar to what I have. Range 1, range 2, range 3, similar to what Wi-Fi is saying with the different stages over there, and looking for a massive deviation down into that zone, is possibly down as low as $8,300. I think that is where major depression sets in, and that ties in with the Wall Street cheat sheet as well. So keep a close eye on that. That is what we're talking about long term. Now, a couple of macro things that I wanted to cover today, which have recently been coming out. And you have Sven Heinrich, so the Northman trader, and he says here, the Atlanta Fed's Q4 GDP estimate is now at 4.4%, suggesting the Fed's rate hikes have done nothing to slow the economy down. Hasn't worked, hasn't done anything. And going on to this chart over here from Alf, Macro Alf, he says the yield curve slope between the 2-year and the 10-year just broke the 2,000 lows, and it's now trading at negative 64 basis points. If the Fed insists on tighter monetary policy, even as the evidence of a nominal growth slowdown piles up in 2023, then we could see those negative 100 basis point levels, which were last experienced in the 1980s. And inverted yield curves essentially indicate that a major recession is coming. It works 100% of the time. And when you look at these, you see nearly 100% of the yield curves are now inverted. We are still far from seeing a bottom in equities. So keep a close eye on the yield curves. When those start to turn the right way back up, then you know potentially the bottom is in, but we have not reached that yet. And Markets and Mayhem are showing that Fed's George says increasingly difficult to bring down inflation without a recession. So here we go again, coming back onto that whole recessionary talk. So very, very important things to consider. The S&P 500 futures, it has hit our area of interest from a technical analysis perspective, and it looks to be respecting this zone where I expected a rejection to take place. It's still yet to break down properly. I'm not really sure whether it's going to still spike up any further, but I will wait for a proper breakdown before I make any sort of a move. I'm still looking for a potential short. Remember, using Prime XBT, I had that short setup over there, and I staggered a couple of orders within the circle. I still need to go and check to see if any of those are hit. There is a stop loss, a hard stop, which is above that zone over there. Okay, DXY. Let's see what the DXY is doing with the dollar index. So also looking like it's reacting from the area where I expected. Still waiting for a proper push to the upside. I saw in the comments yesterday somebody said, "Oh, the break of the DXY or something didn't give us like what we expected in crypto in terms of upside momentum." Meaning, why is crypto still going down when the DXY is breaking down? And my answer to that would be, this is just starting. Remember, DXY long term, if you put on a 6-month chart now, this is still very, very bullish. So high time frame, there's still a lot of upside momentum. And my answer to that person, if they were watching, would be this. You're waiting for the confirmed breakdown, which we got over here. Now you want to wait for the push up into this zone. That should sell off crypto prices furthermore, and that could give opportunities to enter into potential swing trades. And keyword potential, nothing yet is guaranteed. So the DXY move hasn't fully played out yet. If it does reject from there and take a deeper sell off to the hundreds level, so anywhere between 100 and 102, which is the next major support zones, that I would imagine would give crypto a lot more relief. So this is not a major breakdown yet. This is just a small breakdown. That is my answer to that person who was asking that question. So moving on, Bitcoin on the 4-day chart. Same story, stuck below the important moving averages. Essentially, you would not want to be in any long positions as an investor using the 4-day chart. MACD still crossing to the downside. We'll keep an eye on that. And then this is the chart that I mentioned yesterday. I said, look, there is a potential that price could get further up to anywhere around that $18,200 level, but I'm not really willing to take the bid yet because risk to reward, it's not good enough. Now, there would be an opportunity to go long. I'll show you on a lower time frame if you start to sweep near these lows, just because from a risk to reward perspective, it's easier to invalidate. But that would simply be a scalp trading move. Daily chart, which is talking to the medium term traders, the guys that are trading swing positions for weeks to months. There's really nothing over here. I still want to see it push a little bit higher to activate a proper swing short. You're kind of in no man's land on the daily chart. So nothing going on there, but risk remains to the downside. 4-day chart over here, the moving average, as I'd mentioned, that 200 has now started to come directly into that horizontal zone, which is going to be mega resistance now. And with each passing day, this will continue to track down. And that means that the upside potential for any little bounce becomes lower and lower with each passing day as these moving averages pull price down with it. So that's the 4-hour chart. And now here is the hourly. So yesterday I mentioned to you, keep a close eye on the diagonal trend line. As soon as you break and you make a new low in relation to this area on the left, then the bounce of that would be your short activation to activate the short trade. So that would essentially be it. You'd be looking to go short like this. Let's just grab, where is it? Here we go. Short position. This would essentially be the short trade with your stop just above there. Obviously, the closer you can get, you don't need to enter here. If price pushes up a little bit higher, the less risk you can take on the better. And I would be targeting all the way straight back down to those lows as a short trade. Now, immediately, you would be able to flip long again. This is what I was just talking about. So if you were to get back into the range low and the range low was able to hold, not even talking English today, was to hold, then pretty much hard stop underneath that wick over there, and you continue to play the range towards the top of the range with your TP in the mid-range over there. First TP, second TP. Same thing over here. First TP, second TP over there. TP meaning take profit, just in case some of you out there don't know what that means. So very, very quick show. That's kind of what I'm looking at. We'll see how long this range plays out. Tying in with that tweet again over here from Dan. If it is going to be, how many days out is supposed to be? 477 days out is kind of when you find the bottom. Then you can expect that we might chop around a little bit longer within this area before any major breakdown gets found. So look again in relation to the vertical line over here. You're looking at around a month in which, technically speaking, price could consolidate like that and then lead to the major breakdown in the final 2 weeks of the year. And then you can spike back out of there. So that's kind of what I'm watching. Risk remains to the downside. Definitely no signs for me that a bottom is in yet. The only way that can be confirmed or proved is if we reclaim in the region of 19,000, and it has to be so soon. The longer that we stay down here and the longer that bulls take to mount their attack and to send price higher, the less likely chance that the bottom is in, and the more likely that we continue on lower. So that brings me to the end. Again, wanted to quickly remind you with OKX. I know a bunch of you started to mint the NFTs. Join me on Germany, mint the Germany NFT. That's the one that I got. It's free to mint. All you have to do is go to the OKX page. If you don't have an account, use the link below. They actually have a pretty impressive promotion at the moment. Let me just read it for you. So they have a limited sign-up opportunity. You can get up to $10,000 in the OKX mystery box rewards and lucky draw cards. And then you can win an iPhone 14 Pro Max with 1 terabyte of memory. So it's worth $1,600. And it doesn't cost you anything to enter. All you have to do is use the link below, follow the instructions over there. And then once you have signed up, you go through to wallet and then click on NFTs. And then you click on the OKX Football Cup NFTs free mint. And then you can mint any of those that you want for free. Whether they'll be worth something or not, I'm not really so sure. And then one more exciting thing that's coming up is on BITGET. Have a look over there. If you don't yet have a BITGET link, use the link below to join. I'm going to be dropping some information a little bit later on, maybe in a few hours, on Twitter as well as on Discord. I'm looking to put together a team. This is all around the Soccer World Cup, which starts on Monday. So I think it's on Monday that we begin. There's a trading competition with huge prizes. I think it's something between, you can win 5 to 100 Bitcoin. And essentially, you have to have a team of 11 people. So if you are somebody that was in the top 10 on the BitGet trading competition currently, send me a DM with your P&L and everything, and then we can establish a team. I'm the team leader. Rand's going to have his own team. Sheldon's going to have his own team. And if it's anything to go by with this competition, we're going to kick their ass. So join my team, and if we win, you can win anywhere between 5 and 5 and 100 Bitcoin. It, of course, does get split amongst the team members. So go through to my Twitter. Link is in the description below to my Twitter as well. And join the Discord if you're not there already. You will need a BitGet link, by the way. So use the BitGet link below. You don't need a lot of exposure on the exchange. I understand, obviously, now is a sensitive time with all the exchange shutdowns and withdrawal closures and everything. You need minimal amounts of money. I think it's something like anywhere between $100 and $300. So if that's you, you know what to do. Send me a DM on Twitter. I'll be going through my DM if you're interested in joining. Give the video a like, hit the bell notification, and subscribe. We've had thousands of new subscribers over the last couple of days, and we want to try crack the 600,000 subscriber mark before the end of the year. So I will see you all on Twitter and Discord. Have a fantastic day, guys. Appreciate all of you as usual, and cheers for now.